following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Tuesday edition, Tuesday, February the 3rd. February, huh? Well, we know it's February here in New England, looking out, and you got these huge snowbanks. I mean, what do they think? We're supposed to make the pathway clear for the students to be able to get to the high school. And they put 6 and 8 foot mounds. That's tough stuff. All right, so let's get to our story. Thank you, John and Steve, for a few great hours here at TFNN, going through the technicals and all the different ways that they look at the charts. And of course, I have my own methodology, and we'll go through that in detail here. Dow's up 142 at 17,504. It was actually much higher earlier. The E-mini, in fact, hit 2034.50. It's trading right now at 2024, only up 7. And there are a bunch of things that we need to talk about, and we'll talk about it in a moment. Most importantly, the S&P is up 9 at 2030. It's only up 0.46%. The Dow is up 0.83. Dow's leading right now. You've got the composite index, UNCH, at 4,675. Very interesting. Why? Because the VIX index, this is the volatility index, you know, I make a big deal about that. The VIX index right now is trading at 18.81, under the 20 level. If it gets back to the 20s, problems, watch out, holding underneath in the teens, especially if it starts to work its way to the 17s and 16s, you'll see buying pressure. But this is very important. The 200-period moving average in the 120-minute chart is at 1787. It got close, and then it bounced off that level. So we're going to be watching this real closely. I was very impressed yesterday with stocks that we've tried to own, and it's been very difficult to own them. We've taken tiny, little, very tiny percent losses on these things. But my thinking was they'd improved, and the pullback that they had just recently was kind of serious because it was against a market backdrop that was weak. And now you've got GE. Let me just show you GE. A nice little move, but it's only a tiny little move here in the context of where it's been up in the 25, 26 area, down to 23.5, and now it's trading at 24.36. That's no big shakes there, especially if you look at the weekly chart, but it is trying to rally, and that's a good sign. IBM, my Dow Quartet, one of them, is having a nice day. It's up $1.86 at 156, really trying to make some kind of a base here from which to have at least a decent bounce. Triple M was doing very well. It was a leader at one point, then it pulled back, and now it's been consolidating, having made all-time highs at 168. It's just 3 points lower than that right now, but it is really struggling, working very hard to get much higher, but the monthly and the weekly charts are still very good. And UTX, my other pilot light with GE is the shorter term, UTX is more the intermediate term, is still under the high of 120.95, 120.66. Was the previous high, all-time high, then it's stuck above to go to 120.95. And we're going to be watching this really closely. Why? Because within the context of the Dow, I need to finish, let me finish up what I'm doing right now. As long as GE and UTX are holding well, that gives some kind of comfort and some kind of support. But I really want to see these two stocks become leaders in their categories. And so far, they're just working hard to maintain their integrity right now. So we're going to be watching it real closely. Now, this is going to be important to me. You've got gold, GC, continuous contract down 20. It's all within a containment area with the 200-period exponential moving average in the daily at about 1254, 1253. But what's really important, everything about it says that the weekly technicals are holding quite firm, and that the 1245 level 9-period moving average in the weekly chart should be sacrosanct. It should not close underneath it. It might just touch it. But what's really important about this is that monthly chart still says to me, counter trend rally could have time and price, but not a major breakout, because the 1400 to 25, 35 area is going to be really strong resistance. Hey, not a bad move to get there. I'm just saying that I'm looking at, after being hammered really for so long, this is just a very nice relief counter trend rally that should last 6 to 8 weeks, maybe even more, maybe 3 months. And that's the way I'm looking at it. That's not to say that we aren't holding a long position in gold, an ETF, but that's part of what I'm looking at here. So counter trend rally holding well. Now I just want to look at ASA as one of the stocks I look at. Look how nicely it's holding. Got repelled at the 200-period moving average of 12.28, and now it's at 11.83. ASA Gold and Precious Metals. I mean, this is almost like a South African fund that's, I think, based in the Bahamas, or somewhere around one of the islands. And weekly chart is still holding very well. It's just telling me that there is internal strength enough to have a pretty decent bounce using time and price, but not a major breakout as far as I can see at this particular point. IYT, Transportation Index, is telling me a story here that says still be very careful, regardless of all these big rallies to the upside and then pullbacks to the downside. The Transportation Index is suffering. How can I say? I shouldn't say suffering it's not bad. I'm just saying in the short to intermediate term, it has really been struggling to break upside, but it's really part of a consolidation in the monthly that has been absolutely spectacular, with all-time highs at 167.80 in the iShares Dow Jones Transportation Average. And if you go to the XLU, which is the S&P Select Utility Spider Fund, peak E in the daily at 49.78, consolidating. Peak D in the weekly, consolidating well. Peak D if it doesn't make a new high this week, but holding the 9-period moving average of 47.80. And the monthly chart is in C/F. I would not be surprised if there are new all-time highs to come in the utilities. So, now, what we're looking at this particular point is the dollar is having that high-level consolidation I spoke about maybe 2.5, 3 weeks ago. I said peak E, and there's a good chance we're just going to go sideways. I'm going to get rid of this for the moment. It's not serving the purpose that I wanted. It's just saying that's the rectangle that is most important. And in this particular case, let me get rid of this. That's where I said that I didn't think that the dollar would go much higher than 93 something. It actually went all the way to 95 something. So it went just a tad higher. But this is what I'm looking at here, that there's a consolidation going on in the dollar, and at 92.24. Let's just say a close in the 91s on a weekly basis would start to suggest that the dollar is topped out in the short to intermediate term, and that the upside is going to be very limited. And the euro, can you believe the euro is starting to look good? It's in leg B right now, making a little bit of a weekly V-shaped recovery. Remember, this is the bar that says in a monthly that if you break down below the left side low, in this case the low of 1.1875, you have just one bar. It doesn't matter whether it's a monthly bar or not. You have the bar that broke down, and then the very next bar to try to get back above 1.18756. Oh, man, it's going to be so hard to do. It's at 1.14588, but it is saying that I'm trying to make some kind of a turnaround, at least a short to intermediate term. Let's see if it can work out. USD JPY, which is the dollar, Japanese yen, currency pair. Yep, that's struggling a little bit. That's like the dollar. I suspect it's going to test the lows of 116 to 115. It had a spectacular move. Why shouldn't it take a bit of a breather? Now, let's go to this, because I've spoken about it for months and months and months. I made it a big deal. And I believe that the IBB has topped out, at least in the shorter term, having hit 329.20 just about 7 sessions ago on the 27th of January. January is trading now at 312.38. Remember, I went through it in great detail. I actually discussed it on air with Tom, saying it had just made a peak D. I think it was a week ago today that I said that. Today? Yeah, I think so. And I said that we've just gone to a leg D, and I had explained to my subscribers that this would say to me that it was now a perfect time for risk reward to short the IBB, which is a position that we have in my opening call. Will it be sustained? It's been the darling for years for money fund managers to buy and close their eyes and go to sleep and say, thank God I've got the IBB because it's going to save me and make me a ton of money. I think this is the time that it's not going to do that. We'll see. Day's young, week is young, the month is young, and the year is young for this IBB, which has just been an absolute. I've had people call my show for years and say, Basil, you might be looking at the shorter term pullback, but we are remaining long. There was one caller that called about, I'd say a month ago, I think, maybe a month or two, who said, this is the first time that I'm taking some money off the IBB instead of putting it on, and I'm lightening up a little bit, but I'm still keeping my core position. That person's looking fantastic. And having taken a little bit off, it might not even be where they took it off because it's a run up even since then. But I think that was a wise thing to do. Be careful out there with the biotechs. Money is, I've been commenting about this for a while. I've been using the term distribution a lot more than rotation for the past 6 weeks to 2 months. And that's what I think I'm looking at here in a number of areas. Distribution is going on, meaning that the huge funds are starting to get rid of some of the huge winners. You know, when Fidelity or Wellington or any of these or Vanguard gets into stocks, they don't just buy their portion tomorrow. They say, oh, you know, I love whatever it is, GE. And then tomorrow they just buy all of their GE, 100,000 shares or 1 million shares of GE. They don't do that. They start a position. 6 weeks later, they might add. 3 months later, they might add another position. 3 months later, they might add. These are for longer term situations. So how do they extricate themselves? They either get into a panic and they just get out of a chunk, but the really wise fund managers start to exit early, and if they start to see increased selling, they make a decision to maybe increase their holding for a little bit and then get out, or they join the crowd and say, okay, now the selling is increasing, I'm going to just get out completely rather than slow it down to my last third. I'll get out of more than my last third, whatever it is. So that's the situation. We're going to be watching this real closely. Now let me show you this. We've got a break coming up. I just wanted to show you that 17,000 level that I made a big deal about in the Dow has held. And I'll talk about these two candles right here as soon as we get back. Dow's up 172, S&P's up 13. Basil Chapman, Tiger Editions Hour. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Big question here for those folks who use the Chapman wave methodology. Is this, in fact, a G or a C in the monthly IBB chart? That is the iShares NASDAQ Biotech ETF. Well, there was a one-to-one expansion from the low that was made off the peak E right on the 9-period exponential moving average of 164.14, going to the high of peak F/B. Remember, that was, okay, so let me just do this. And that was at 275.40. If you take the low bar after that, which is at 207, you come out to a one-to-one almost precisely at the 329.20 high of January. So yeah, one-to-one, you can get your measured moves. The question really was, isn't G usually a shorter leg on the way up? And I said that no. Legs are legs in the Chapman wave. All my objective has been, ever since the day that I discovered this technique, using a pencil, hand-charted points of contact. I've tried as many ways as possible to see if there's a measured move from A to B, and then, from peak A, pulling back, and where B would be. And does that give me a measured look to say that C has to be here and then D? No. The objective is just to say that 1 penny above the previous peak starts a new leg, and that should go to at least a D, and then other things can happen. So the answer is other techniques allow me to measure the move, but the actual technique of labeling is only a higher peak or a lower trough. That's all that counts. All the other stuff is peripheral. That's number one. Number two is the stochastic. The question really, Z in the Den asked, is this going to be a hat-trick top? Meaning, are we looking at the biotech sector as being not just a pullback here for a month or two? Is this a 3 to a 6 month pullback, at least minimum? It could be way more than that. And the answer has to be, at this particular point, we haven't even got a peak. You need the whole of February before I get a peak. That's number one. And number two is that the stochastic is suggesting at 91% that there's still internal strength, and the MACD hasn't yet turned down. It's flattening out, but it hasn't really turned down. Look at the histogram. They're just barely turning down. It's still way above the 0% line. It's the light green one there. So all I can say is that I need patience. And what happens in a situation like this is periodically we'll get it where we will set in place a short or a sell, and it starts off in the daily. We haven't even got the weekly to confirm a peak yet, because if there, whatever the reason, I don't think it can happen, but if this week 329.21 is hit, it extends that peak. Or if it goes next week to that level, that'll be a D, and there's that resistance line. So it's still very early. There are tons and tons of signs hinting to me with my methodology to suggest that this is not just a short-term sell signal, but it is an intermediate-term sell signal. But believe me, if you don't go step by step, you can get whipsawed like crazy. It hasn't even closed in the weekly chart below the 9-period moving average, which it broke above back in October after that smash. Remember, I had the sell signal, and we were short via one of the ETFs, shorting the IBB back in September, going into October. And then we got a very nice move to the downside, and then had to quickly switch. And so ever since it broke back up, the week of the 24th of October, after that October 15th low, this has been on a tear, making the 9-period exponential moving average a support level. But the hints that we were getting close to some kind of an intermediate-term reversal in the weekly came about because of the number of times the price snuck underneath the 9-period moving average, even though it closed above. And that was the hint to say that the next time that there's a close under the 9-period moving average, and that's around about 311, 312, on a weekly basis, that would be the first time that you're getting a signal to say, ha-ha, now there could be a trend change. Watch the MACD, watch the slow stochastic. So the answer is, I think so, but think has got nothing to do with no. I'm only thinking that's the case, and you have to go step by step, and it would be great. I mean, I could say to you, absolutely, we've got it, and the next move is 289, which would be under the 9-period moving average in the monthly, and that'll confirm for me that the monthly has gone into a sell signal, not yet a sell mode, but at that point the weekly will be in a sell mode. But I don't usually do that. I like to go step by step, and all I can say is a close under 305 is needed for me to get a sell mode in the daily and a sell signal in the weekly. Okay, we'll be back, and the Dow's up 168, S&P's up 12. Basil Chapman, Tiger Technician, said, hey, I'd love to take some calls.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. One of the reasons I believe that the S&P and the Dow are acting quite well like this, actually very well on a price basis, is that you've got the oils, the integrated oils actually participating for a change. Let's go to Alex in New York. We'll talk a little more about that. Alex, how are you?
Okay, Basil. I think you were talking about me earlier, selling my IBB.
Oh, you just had a call, huh?
Yes.
Yeah, well, I have to congratulate. At the time, I said to you that I think that you've traded it. You haven't traded it. You've positioned yourself extraordinarily well, and that I did agree with you with that last sale, and we'll see. But, it's just getting harder and harder. Not only that, when you're looking at a particular sector, and it's just constantly been a winner and a winner and a winner, there's just a certain point that is reached where it's like throwing a ball up. There's that moment where there's 0%, it's not going up, it's not going down. There's that 0% gravity. It's about to change course. And my guess is that we're in that position right now. And we'll see, because what makes sense is that, and I've got it here, I'm going to deal with this on an individual basis with someone who has their own stock from the company they're with. And what do they do as the stock keeps going up? And they've lightened up a little bit, and they're saying, gee, I don't know, I'm upset. But you know what? Prudence says that you've got to use money management. So that's what you've been doing. So you'd like to look at what?
Well, I used some of the money to buy ExxonMobil. And I got
And
a very good price considering what today's price is. I got in on a fresh position at 86 and a quarter.
But that, if I recollect, now it was a long time ago that we spoke about this. I think that's what you said that you were going to do, right?
Yes, I was looking for a low price in ExxonMobil. I own old shares of it at very low prices, but I thought that this drop in especially in the integrateds was not going to last forever, that they would come back.
So let me just tell folks what we're looking at here. If you're looking at my chart of the Dow, white background here, and you're looking at it over a very long period of time, going back, say in this case, I'm going to actually squeeze it so you can see even further. Going back to the low of 2002 at 29.75, you'll see they're using the Chapman wave methodology, and if you just use the MACD, the moving average convergence divergence, that green line, you'll see that when the green line turned and came back down and then went up again and then turned, it coincided with the peak D in February of 2000 or February or March of 2005, and then started a brand new move with the 9-period moving average acting as support, goes to a peak F with a doji high in October of 2007, but it then pulls back and has what I call a right arm extension. It is a rogue wave in the sense that the technicals were completely failing. The price didn't know it, and that one wave, which didn't see the sign that said high tide at noon, at 12:06 shoots up to the end of the beach, gets everybody soaking wet, and that very bar turns around at 96.12 back on the 5th, back in May of 2008, and then plummets down to 55.94. It's about a 46% decline. Starts a brand new move and goes to a peak F. It does almost the same thing. It has a peak E, the fifth highest peak in December of 2013 at 101, but then it pulls back, holds the 9-period moving average, and then with about the same number of bars, it squeals higher, it goes to 104.76, and then it makes what I call in the Chapman wave methodology a 2-bar reversal at 104.76. And that is with the technicals failing, and then it comes down, and it comes down to the most recent of 86.03. Now we're going to talk about two different things. Alex is looking at this, is looking at it as a two-prong position. One is it's a dividend play, and the other is it is an integrated oil that historically, regardless of what happens to oil, somehow or other always finds its way back to the upside and produces a very nice gain. This is where we might differ, and we're going to go into it now a little bit in more detail. So you're in at a nice position. You're in the 80s, and it's at 91.34 right now. So you have a bit of a cushion. This is what I'm going to say to you. You ask for my opinion, or you just are you telling me, or you're asking for an opinion?
Just your opinion, because the Chapman wave works out with the way I trade the market.
Great.
And I don't use the Chapman wave, but it seems to be, it works similar to the way I look at it. I consider myself a trend follower.
Right.
So I don't know if you consider the Chapman wave to be following a trend or not.
Well, once you're in a peak A and you go to a B and then I get a buy signal to a buy mode, that's a trend, and that's a projection that says you should go to higher highs. Now, we haven't yet we have just today, no, we haven't. Last week's high was 91.94, and we made 92. So we've started a leg A in the weekly chart. Just wanted to get that out the way. And we've started yet again another leg A in the daily. Now, let me just explain to you what I'm looking at here in terms of chart patterns. You will recognize my words, although you might not recognize the chart. You remember in the gold index, the GLD, I had said that there's a pattern that I use in the Chapman wave methodology called a lowercase h that can go to a lowercase m. And the M pattern can continue. It could become a continuous pattern, making arches, but at some point it takes out the left side low. And if it takes out the left side low, the bar that does that has to go right back and trade very strongly and go above either a previous peak on the left side or one of the moving averages, to be able to show that it has the strength to create a larger arch. So here we are. Now, at this point, we're on the same wave in the sense that I think that the low that was made at 86.03 on the 29th of January is not just a low, it is a low of consequence. I suspect there's going to be, it's what I call the internal low. There should be what I call a residual low later on, 6 to 8 weeks. And that residual low could be higher and it could be lower. If it's lower and it starts to fail, that's very negative. If it's higher, in other words, if it doesn't take out 86, but it comes from having gone to 94 or something like that, and it pulls back to, say, 89 or 88, and then there's an internal low that's an emotional low. The newspapers are talking about oil looking bad, and Exxon holds steady and then moves higher. That will be for you the equivalent of the IBB recycling up. But I'm a little concerned in the weekly chart that the H pattern that I'm looking at on a shorter-term situation is if it can break above the high of 92.97 made on the 22nd of February, that's really positive because it does two things. It makes 94 the target in the short to intermediate term. So that's a good sign. But on a weekly basis, my suspicion is that if there is a rally, which somewhere between 95 and 97 is going to be tremendous resistance. And the weekly chart would then say that there's another H pattern forming, and 93 is the 9-period moving average resistance in the monthly chart. So it would say that there could be an H pattern in the monthly because the MACD and the stochastic are so weak that it starts to fail and then it comes back and does a retest. So let me just sum it up. I think on a short term, I'm not going to interfere in one iota in your position. You've got a position. I think it's a good position. You're certainly up very nicely, but you do need to hold 89 as support. I'd say 89 to 88.70. If it breaks under 88, it says, uh-oh, this is not a good move at all for Exxon because the integrators are really going to become impacted by the lower price of crude oil. But at this point, they've actually held pretty darn well. At least Exxon has. So I think dividend and everything, you could have 3 months of a move to the upside only if by February the 17th to the 22nd, Exxon's holding nicely above 94.5, 95, somewhere around there. Then I think it could continue for a little longer, and that would give you that 6 to 8 weeks, maybe longer. We'll see. But I'd be very concerned if it started to break 88 support. That would say to me, uh-oh, it's going to start to fail, because that's the pattern I'm looking at in the weekly. So far it's good. But just if you want my opinion, I'd be a little careful at 88, breaking 88. But I don't know if I'd add to the position, but I'd consider a break above a close above 92.97. Let's call it 93. Very positive on the shorter term. Hope that helps you.
We agree again.
Good. Hey, that's nice. Thanks so much for calling, and congratulations. Certainly congratulations on a fantastic position play on your IBB and now your Exxon. Thanks for calling, Alex. We're going to go to Mike in Toronto. Mike, how are you?
Good, Basil. How are you doing?
I'm well, thank you.
Actually, I shouldn't ask you. You're always very cheerful.
Oh, okay. You know what? I kind of wake up every morning and I like to see you don't choose these things. It just happens that I always find that the glass is half full. I have to counteract my wife. She's always been the one with the glass is half empty.
Well, you're doing better than most.
Yeah.
I like your opinion on the Canadian dollar. Where is it headed?
So that's a very good question, because I did some work recently, and I wanted to see what was happening. Certainly, because of oil coming down like this, I was kind of checking out a lot of Canadian issues, and I was just looking at it as if it was a Canadian hour and a half I was spending, and I must at 1.306. The USD CAD, the United States dollar Canadian dollar currency pair, has got the same U-shaped pattern that the dollar has, the US dollar, just the index itself, and the USD JPY also has had a really beautiful cup formation. So let me put it into the context of USD, CAD, where it is and where it's come from. The high that was made in the monthly chart way back when it tried to get back over the 200-period exponential moving average, that brownish line right there, khaki line, it went in March of 2009 to 1.306. Then it pulled back, not to the low that was made back in 2007 in November of 0.90. It pulled back to about 0.94 in July of 2011. And that started the right side of the U-shaped pattern. So now what we're looking at, it has failed. Let me just check, 1.306, 1.279. From the way I'm looking at it, because it's broken the 200-period moving average, because the 9-period moving average has just this month gone above the 200-period moving average, which is always a tip-off to say that's very positive, but shorter term it could be where there's a little bit of an overbought situation. You can see that the stochastic and MACD are holding very well. The price has pulled back somewhat, but I've got this as leg F. Now, this is very strange because the dollar, I've had to call, if I'm very strict about it, I have to call it leg A. I could call it a B, but at this point I'm calling it a G/A with an emphasis on the A. And the USD JPY, I'm just talking about chart patterns, is in a D. So that kind of corresponds. So let's go back to USD CAD. Now, I'm not sure just how this would impact you. If you're trading it or you're talking about what happens with my currency, etc. But what I will say to you is that based on the weekly chart, and that's going to be really important, based on the weekly chart, this is an alternate count. It's a G/C. I put it as a C, but I forgot to put it as a G/C. G/C. The stochastic's pulling back, but it's still at 93%, and the MACD is very strong, but kind of overbought. So I'm anticipating that this is going to be a peak F in the daily, that there's a chance at 1.246 it's going to pull back to about 1.22, between 1.23 and 1.22. If it can hold there and then rally even back to the 1.24 area, that says you've got a rectangle type formation, a high level consolidation. If there is just a little bit of a rally and then it starts to make lower lows, it says you've got yourself an intermediate term type pullback that should correspond with the United States dollar pulling back. Oops, I just missed it over there. Dollar, the DXY, because patterns are patterns and they can't repeat. They are fractals, and they transfer from time frame to time frame and issue to issue, depending on the pattern, the matching of the pattern. And that says that the dollar could pull back to 92.19 or even 91.50. And if that's the case, then I would not be surprised to see the USD CAD, United States dollar, Canadian dollar currency pair pull back to that 1.22. Could even test 1.21. So can you hold on a second?
Yes, sure.
Okay, if you can hold on, I want to just finish this up to show you some other relationships. I'll be right back. We've got Mike and...
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. I'm just finishing. This is an A. That's a B. This is a C. This is a D. And we always expect a D, E, or F for a top. And there it goes to an E, and pop. There's that F. It's just amazing how often that happens. Oops, not a V, but an F. So, Mike, what I want you to do is just to quickly go through the EWC, which is the iShares Miscellaneous Canadian ETF, which I glanced at over the weekend. I didn't renotate this, but I just did it now. The monthly chart made a peak D and has pulled back sharply. But what I was impressed with was the doji high. I forgot it was a peak F candle on the weekly chart. And then it pulled back from the 33s down to the low of last week, which was at 26.05. Now it's at 27.69. And that's one of the reasons is because I think that the oils are moving higher here. So I was a little surprised. Yeah, I always chuckle about this. I always talk about United States. I've been here, I don't know, for 4 decades or something, and it's just by chance that there was once a president there who had a very, very pretty wife. That was Trudeau. And that's the only time I ever heard anything about Canada. I would never have known that there was the 3,000-mile border with Canada. You just never hear anything about Canada. I can't believe it. Anyway, so the story here is that the EWC is rallying right now. It looks a little bit like the crude oil chart. And I think it's going to rally and then stall. And I think that I would say that I'm going to watch the USD CAD very closely because if the US dollar Canadian currency pair starts to pull back, I want to see how it impacts, how the oil impacts, and how the oil impacts the EWC, the Canadian ETF.
Oil has been impacting the U.S. dollar.
Absolutely, yes. So, hey, it's a good question. I hope I've helped you. I'm going to do a little bit more work over it in the next few days. Maybe we'll talk again in a week, and let's see how it is. Okay?
All right, thank you.
Thank you so much for calling. Let's go to Max in Fort Lauderdale. Max, how are you?
Good morning. A little quickie. Thoughts on copper, please.
Okay, copper. I looked at copper real closely last night. It was one of the two that I wanted to put a position on. I never did. I think it's worth a trade. I would not do anything more than a trade. Copper's up. It's at 2.56, up 0.07. I think that copper, the continuous contract right now says that if it closes in the next 3 days above 2.63, then copper would have a target of 2.68, the 9-period exponential moving average, and then I'd be careful. I consider this just right now to be a bounce, but that's about it. Were you going to trade copper or an ETF or what?
ETF.
Okay, so that's like JCC, I think it is, right?
Yes,
or JJC?
JJC.
Yeah, JJC. Yeah. Now, if you're going to play it now, you've kind of missed. It's got a big percentage move already, but I would make a smaller position, and I'd even say to you, you might miss it, but I'd probably want to wait for a little bit of a dip, get it closer to 30.16 than 30.76 that it's at right now. So somewhere between, you know what? You could start a small position now, and you could add another small position if it pulls back. But realize it's just coming off a low. It's kind of risky, but the technicals are concurring with the rally, and the doji candle that's forming in the weekly says, hey, you could have a good 2-3 weeks here of a rally. Hope that helps you.
Thank you.
Okay. Thanks, folks. And we're about to take a break. What is, Tuesday today? Yeah, Tuesday options hour, fabulous options hour coming up. Now, watch this market really closely. The Dow's only up 139. S&P's up 9, much less than the Dow. If there is a reversal and the Dow only closes up 60 points, I wouldn't even say goes negative. I'm just saying if it does that, this choppiness is very serious. And it's saying we are shaking the bulls, we are shaking the bears, but 17,000 on the Dow is absolutely critical. That's the level to be watching over the next 2 weeks or 3 weeks. But in the meantime, it is a nice rally that we've got at the moment. We'll see what happens. And watch the VIX index. And it's the best option show on the planet coming up. Folks, I'll be back tomorrow. Have a great day. Check out
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.